In this video, we will be talking about 4 ways to build your credit score fast. If you want your credit score to look like this, or you are having difficulty getting approved for an apartment or a loan due to what is considered a bad credit score, then this video is for you, and I will go into details of things you can do to quickly and dramatically improve your score from a bad or fair rating to at least a decent or good rating relatively quickly. So stay tuned and watch this video until the very end as we are getting started right now. Hey guys, welcome back to the channel. This is Shuril and you're watching Modest Millennial, where we talk about all things money that they don't teach you in school. So if you are new here, please consider subscribing and liking this video below to show me that you enjoy saving, investing, and growing your money. Before we get into ways to improve credit, I think it is important first to know and understand what your credit score actually is and find out the things going on in your credit report that are actually bringing your credit score down. There are a ton of free ways these days to generate your credit score and monitor your report for free. So make sure that you are not on a website that is asking you to pay for a report, because chances are that it is either a scam or you are wasting money for something you could be getting for free by easily going to a couple websites linked in the description below. When it comes to generating a free credit score check, creditkarma.com is a beautiful and a reliable source to start. I have been a member of Credit Karma for probably 8 years at this point, and their data collection and credit score accuracy keeps getting better day by day. Moreover, based on your credit score, Credit Karma will give you personalized recommendations on credit cards that you have a high chance of getting approved for, personal loans that may help you consolidate some of your debt, and just general information about your credit age, your open balances, and the number of open accounts you may have. But for a more detailed credit report, it might be worthwhile to go check out annualcreditreport.com and fill out some basic information to get your one free copy of credit report every 12 months. This report is pretty extensive and can provide information such as open balances, names of open accounts, all the payments you have made for all your open accounts, and how many times these payments were made on time. And more importantly, how many times over the age of the credit you have had hard inquiries and soft inquiries hit your credit score, and when they will be taken off the report for you. So it is really important to get a free copy of your report and just go over the whole thing to really understand what is bringing your credit score down. The first factor to consider that may be affecting your credit report and you can improve upon comes from your payment history. So the payment history on your credit report really shows if you pay your minimum monthly payments on time. Say for example that you have a credit card payment of $250 due on the 31st of this month. The payment history will show the date that you actually made the payment on and will be an indicator of if you pay down your dues on time or pay them late. Research indicates that your payment history is a major indicator of your track record as a borrower and is the biggest factor that contributes towards determining your credit worthiness. Payment history makes up to 35% of your credit score and should be taken seriously. So in order to get your credit score moving in the right direction and to improve your credit worthiness, here are some things related to payment history that you should consider taking care of. The first thing to do is to pay bills on time. Sounds like something that is easier said than done, right? But this is the best way to start getting your payment history on track and to improve your credit score. A few late payments do not automatically kill your credit score, and a couple instances of late payments may be considered okay, depending on how many times you have paid your dues on time and the age of your credit score. But it is often best to make sure to pay off the dues on time. And the second thing you can do is to contact creditors to see if they can in any way help you to pay off debt faster, like by lowering your interest rate. The second factor that may be affecting your credit score is your total credit limit. You can see your total credit limit combined from all your credit accounts you have open on your credit report. Lenders use a metric called the overall credit utilization from your credit report that helps them determine your credit worthiness. What the overall credit utilization is that it is a ratio of your credit usage or your open balance to the total credit you have available. Say for example, you have $50,000 in total credit limit available and you have used about 30,000 in making purchases and are carrying that balance month over month. Your credit utilization will be 30,000 divided by the 50,000, which comes out to 60%. This is a very high utilization ratio and is considered bad and also affects your score. Apart from trying to pay off that balance, what you can also do to improve the ratio is that you can call your creditors, your credit card issuers, and ask them for a higher limit instead. And this is important here. Ask them for a higher limit without a hard inquiry on your credit report. This may not always work out as it depends on your current income, how well you are keeping up with timely payments, and some other factors, but chances are that you can get a good credit limit increase by doing this. Say for example, you call the creditors and are able to bump up the credit limit you have by $20,000. Now your credit utilization becomes $30,000 in an open balance by $70,000 in the open credit limit. That comes out to about 43% in utilization ratio, which is much better than the 60% it was before, and can help you improve your score. The third thing that may be affecting your credit score is how often you make payments on your credit cards. Again, this metric goes hand in hand with your credit utilization from before and can make or break your credit score. But for example, if you keep paying your credit cards little by little throughout the month, that can not only help you keep the credit utilization low, but also has the potential to help you improve your credit score. Say for example, you have a $10,000 limit and unfortunately an unexpected car breakdown costs you $1,000 in the beginning of the month to fix. Since this was an unplanned expense, instead of letting it sit as open balance, try to pay it off little by little throughout the month, so you can knock most of it out by the time credit card bill is generated for that month. This will make sure that when the bill is generated, most of the $1,000 that was spent fixing that stupid car has already been paid off, and thus will keep your credit utilization low. This one comes in especially handy for credit accounts with lower total limits that even $1,000 spent can really affect your overall utilization. And finally, the last thing that may be affecting your credit score is the age of your credit history. Experts claim that the length of your credit history accounts for about 15% of your credit score and can have a major impact. The good thing about this metric is that just like good cheese and a fine bottle of wine, the credit score from length of credit history can get better with age. If you don't have any credit history at all at the moment, it can be beneficial to start with a secured credit card, as you need credit to get credit. But I will talk more about that in another video. The length of your credit history then is determined by considering when your first credit was issued and then counting the number of months or years from that point. Although there is no guarantee that you can use this metric to boost your score right away, this metric has a decent amount of impact on your credit score and has the potential to boost your score as time goes by. So try and stick to the other 3 ways to boost your score from earlier and let the length of credit history do its thing to mature and grow with age. Thanks so much for watching, guys. I really appreciate it. And as always, please don't forget to like this video below and subscribe to my channel for more content on personal finance. Also, if you're tired of just watching me in this small frame, please follow me on Instagram, where I share spicy insights of my personal life and how I save money pretty much on a daily basis. Alright everyone, see you again soon. Thanks so much for tuning into my channel.